back with closing trades, and we're discussing and talking about the market. Almost 1 hour to go for the day's trade to come to an end. We have Richard Jain from Motilal Oswal Financial Services joining us on the show on the technicals. Richard, hi, good afternoon, and thanks for your time. Let's get a little stock specific now and give us your view on something like an NBCC. 5.5% uptick coming in on that stock. Off late, these infra names have been doing very well. Your view on NBCC, or if anything else from the infra pack is looking good on the charts?
The stock has seen some consolidation over last 3 or 4 months within this range of 120 to 105. The good thing is that whenever it dips near that support of 105, 108, where the 200 EMS also lies, we witness good buying interest over there. So today also we can see that the stock managed to form support around the same support zone and has seen price up, which has also been backed with better than average volumes. So I think this stock could do well, but just it needs a follow-up above 120, which should then lead to a good momentum on the upside. So if any existing long positions are there, then they should continue hold on NBCC, and above 120, one can expect a good run-up rally on the higher side. I think L&T within the large cap space also is one infra name which we think that there could be a gradual outperformance within the large cap space in L&T, because that high top, high bottom structure still continues and no signs of trend reversal are there. So stocks such as Larsen, NBCC, I think they could do well over short to medium term.
And what's your call on the index, Richard?
Yeah, hi. So overall, we have seen some consolidation on the index front in last few trading sessions, but no, whatever correction has been there in the markets, there are more into mid caps or the small cap names. But Nifty index has not breached that its important 50 DEMA support, which is around 25,700 to 750 zone. So we think that the broader trend still remains positive as far as index is concerned. Till 25,700 is intact. So the short term, we would see that consolidation in the range of 25,700 to 26,250.
Deepak, you are quite a big advisor when it comes to asset allocation and pushing towards the right asset allocation. Now that gold and silver have gone up, we've seen a likely repo rate cut continues to be in the pipeline as well. How would you allocate, for example, at this point, a portfolio, in your opinion? How much of equity, small, mid, large, and gold, silver, and maybe even debt? Give us a sense of that.
So I think a lot of asset allocation is personal because everybody is slightly different in terms of goal, time frames, and when they need the money and so on. But in general, if you have a very longish time frame before you need the money, then I would still be equity heavy because it is one of the largest wealth creators in the last few decades, and I expect that will continue. So even if you look at more reasonable inflation over the long term at between 4 to 5%, economic growth at between 6 and 8%, you're talking 10 to 12% of economic growth that will come to the country. And I think therefore equity should do well as an asset class. I don't expect the same in the long term of a gold or a silver. So while it has done well, it should have been if it's been in your kitty, it's a good thing. But I would say keep it to a smaller percentage, typically 5 to 10%, or maybe 10 to 15%, depending on how risk averse are you towards volatility. I would say then the remaining should be balanced between equity and debt. Equity, if you are substantially more wealthy, you would probably want to add your international equity pieces. But within India, you would typically want something of the order of some large cap, mid cap, and small cap. Typically, we'll say something like 50, 30, 20 or 50, 40, 10 for somebody who's relatively new to equities because to ease down the volatility. But I've seen people who swear only by mid and small caps and are willing to take the volatility. So they have only maybe 10 to 15 or 20% large caps. And the remaining is substantially in mid and small caps. This changes over time because some of your mid caps grow bigger, they become large caps and so on. But still, I mean, that's the profile, the person's risk profile will kind of determine that. And debt is typically a balancing act. So if you're looking at long-term returns of say 10 to 12% in equity, it comes with some years of minus 30%, some years of plus 40%. So you are going to roll around quite a bit. So even if you're in for long term and you don't like the 30% negative kind of volatility, then you can use debt to balance it out. If you went from 100% equity to 50% equity, 50% debt. This minus 30% on equity will result in on maybe a minus 13% on your overall portfolio if you're only 50% equity, because the debt will give you some positive returns. So that way you can reduce the volatility in your overall portfolio, because that's something that you don't really like in your portfolios. I would say even now that the markets remain attractive for the long term, you'll have to bear some short-term pain and deal with this grind that's currently happening. But that patience is what is rewarded in equity markets over the long term.
And what about IPOs, Deepak? Are you subscribing to any? Are you finding any interesting? And okay, even if you're not, give us a sense of how many are you finding interesting? Maybe over the last 15 IPOs that have come out, how many of those have you really found interesting?
So we don't look at SME IPOs at all. So
Sure.
we're looking at only board.
Yes.
But the main board IPOs, some of them are interesting. What happens, what we've seen in the recent past is many of these VC funded kind of startups that have gone and listed, their VCs want to exit their stocks as soon as they can. So after 6 months, when the lock-ins open, these guys will start looking at bulk deals and selling in the market and all that stuff to take their money out, and generally creates a lot of depressive price element. So I'm not in a hurry to have to buy. So I don't think the prices will, substantially go up from here right now. Some places where there has been excitement about 6 to 8 months earlier, maybe a year earlier, some companies in the EV space and all that, those remain of interest, because then they've passed through this, the VCs selling their stake phase, and now they're showing actual real economic growth. So that is when we have some 2 or 3 quarters of their returns, their results, their interviews, and all that stuff that have passed through. That's much easier for us to be able to buy, because now you're able to kind of analyze the impact of how they've dealt with governing in a publicly listed kind of a scenario, how their results have morphed or changed over time, and the ability for us to actually see the business on a more closely oriented basis. Because an IPO, you just get one chunk of information. Over 2-3 quarters, you'll get how that company has done over the next 6 months as well. So interesting, but maybe not as interesting for us to jump in right now into an IPO offering as yet.
Okay, Deepak, thank you so much for joining this conversation, and it was an engaging one. So we leave it at that, and we'll let you go. Also, talking IPOs, ICICI Pru AMC, they've launched a 10,000 crore IPO, and we got in touch with Nimesh Shah, who's the managing director and CEO at ICICI Pru AMC. Most importantly is to try and understand more about the company's growth roadmap, going forward. Of course, he didn't give guidance, but he did give an indication. Listen in.
What is your operating profit? The total profit more than the PAT. The operating profit after tax is more important, because what is the revenue or what are the profits you are generating out of the business? Sure. Right? Other income is a factor of how much net worth you have kept in the business. India is all about volumes. India is not about margins. I think the regulator has done a brilliant job of ensuring that our margins are reasonable or low. Lower the margin, better the business in India, because India is a place where you have to play volumes and not margins, especially asset management. It is too early days for equity investors, because now we'll launch the schemes. In the next 6 months, we'll see ICICI launching our SIFs. Over a period of time, we'll see the performance of those. Customers will also see the performance of those, and after 2-3 years, they'll start building on that.
Welcome back, and we have with us both Ruchit as well as Kunal to talk to us about technicals that are playing out in the markets today. Kunal, one stock that's really standing out is Interglobe Aviation, 2.3% higher. We've seen a nice bounce back in that stock. Is it only upwards from here, you reckon?
No, I think it'll be a lot of volatility, but yeah, I think what the stock has done is it's found its floor or a support for itself in the near term. That massive round of price correction, volatility the stock had shown through, and that too at an impact where the stock, I think, the last 10-15 days approximately fell down from 5,700, 6,000 levels to almost on the verge of breaking that 4,700 mark, 4,600 levels, for interglobe aviation. So that 20% broad correction that now seems to be, or the impact of that seems to be now behind. I would actually now look at the stock stabilizing at current levels. What this also offers is a good opportunity for, say, medium-term, long-term investors to start nibbling into the stock price, because we've always seen that good price, good news, they never come together for stock prices. And when you see the stock finally finding a good support range for itself, that becomes a territory where traders, longer-term traders specifically, they start nibbling into the stock.
Ruchit, PSU banks, that's the other pack which is buzzing today. Positive from here with regard to the PSU banking pack. We've seen a bit of consolidation. What next?
So the broader trend for PSU Bank have been positive over last few months. In fact, in this entire up move over last 3 or 4 months, we have seen a good relative outperformance from the PSU banking space. The last 15 days, or a couple of weeks, we have seen some retracement from the highs, but the Nifty PSU banking index is now taking support around its 50-day EMA. So which clearly indicates that this entire correction of last couple of weeks just seems to be a dip within an uptrend. So yes, the overall trend still remains intact. There's no change in the broader trend, and this correction offers good opportunity to again buy the stocks at lower levels. But initially we think that if one has to go long, then it has to be the leaders such as SBI or Canara Bank, where relatively we have seen good outperformance when the prices were going up and the correction is less compared to some other names. So stocks such as SBI and Canara Bank can be looked to buy at current levels. And if the broader trend resumes in the entire sector, then one can look on to some mid or small names. But for now, yes, overall trend remains positive. It's trading around the support levels. The PSU bank index is around at 50 DEMA. So SBI, Canara Bank can be seen as a buying opportunity.
Again, a specific counter, Kunal, and we were just speaking about it. Shakti Pumps. I want to mark this counter out because now both Shakti Pumps as well as Oswal Pumps buzzing on the back of that order win that Shakti Pumps has won. Let me read out that order for you. 71 crore order win from the Madhya Pradesh Urja Vikas Nigam, and it's for 2033 standalone off-grid DC solar photovoltaic water pumping systems. And on the back of that, you can see the move on the stock, 15% higher on the back of that order win. Kunal, on charts, how is this one looking?
40% up in the last 3 days from 550 levels or 540. They're about to now 750 levels. So it's been a fantastic uptrend for Shakti Pumps in the last 3 days. And the kind of volumes which you've seen in the last 3 days is one of the best volumes the stock has clocked in a span of, I think, many months and many quarters historically. So I think in that context, it's done reasonably well for itself. Difficult to give a buy call or a sell call at current levels because of the way the intensity of volumes are shaping up in the price, which have moved very, very swiftly into the stock price at current levels. I'll wait out for a point where the stock normalizes or goes into a phase of consolidation. That will give us a better hang of what the near-term trends could entail for Shakti Pump. But this is more of a reaction which the market participants have shown, specifically with the kind of news flow for the stock price.
Very interesting. Okay, what we'll do is slip into another very short break. On the other side, we'll bring you that short conversation we had with Wakefit, or maybe a part of that, and we'll continue chatting with Kunal and Ruchit. Plenty of buzzers in this market. Stay with us. Welcome back, and thanks for in fact being with us. We also are joined in by Mayuresh Joshi, Head Equity at MarketSmith India. And Mayuresh, good having you. Mayuresh, let me first have your pick within the financials, and we're just discussing PSU banks just prior to this break. Within the banking and within the financials pack, is PSU Bank really standing out for you, or do you believe that a large part of the rally is now done? Let's start with that and maybe a follow-up thereafter.
Afternoon, Harsh. No, our take is that valuations still remain relatively inexpensive for a whole host of PSU banks. And the kind of numbers that they've probably posted in the commentaries that have surrounded a large part of their financial performance in Q2, it gives us the confidence that the next few quarters will be relatively better as well. I think the only thing that is probably expected to create some element of stagnation is how deposits probably are expected to grow, specifically in a situation where interest rates are coming down. And therefore, I think deposit accretion is going to be extremely key for the banking sector as a whole. And PSU banks have an inherent advantage in terms of the sticky deposits, both time deposits that they carry onto their balance sheet. Therefore, our sense is that the advanced deposit ratios should remain healthy. Asset quality pressures should not be picking up quite substantially as we head into the next few quarters. Provisioning has been extensively done on PSU bank balance sheet. I think any recoveries and upgrades that probably happen only add to the bottom line. A large part of capital adequacy remains relatively stronger, and therefore our thesis is it should be a relatively better performance of the Nifty PSU banks compared to the large private banks as we head into the next few quarters. And therefore selectively remain constructive. Again, I think large caps, State Bank of India, within mid caps, Bank of Maharashtra, Bank of Baroda is something that we continue holding in our local and global portfolios.
Okay. All right. So that's with regards to and Mayuresh, if I were to just ask you a follow-up thereafter, do you believe that a substantial re-rating in the ROA is possible within the PSU banking pack? And by substantial, I even mean maybe from 1% to 1.2%. Can a 10-20% increase in the ROA, which is the 1% benchmark for PSU banks, can that at all happen?
There is a strong possibility, Harsh.
Okay.
And again, I think all these factors might actually lead to balance sheet actually expanding at a very decent pace. Let's also not forget that there are impending talks in terms of a lot of PSU banks probably getting merged. So there is one condition outside of what we are speaking right now in terms of how these merger ratios will play out. But leaving that apart, my own sense is that gradually over the next few quarters, as there is substantial improvement in terms of the balance sheet, both from a qualitative and a quantitative perspective as well, both ROAs and ROEs should probably expand. So if you probably do a DuPont analysis over the next 4 years, our own sense is that there should be a decent expansion happening in both the return ratios, ROAs as well as ROEs.
Ruchit, Restaurant Brands is one stock which has been extremely choppy last few trading sessions. Down 3% again today. What's happening there? Give us a sense.
The overall trend is not that positive for the stock. In spite of that, what we have seen over the last few weeks, the stock had corrected from that high of 85, 88 to 60. Now, the recent pullback move which we are seeing from the lows is mainly because of that support level around 60, which was the low formed in the month of March. But there's no high top, high bottom structure still getting formed on the daily or the weekly chart. So we think that maybe if the price-based correction is done, the stock could go through some time-based corrective phase where a consolidation could be seen. But 60 would be the support and 75, 76 where the 200 EMA is placed would be the resistance. And we expect some consolidation to take place within this range itself.
So that's the take on Restaurant Brands Asia, one of the players from the QSR space. But let's shift our focus to a corporate conversation. We have Mr. Dinesh Agarwal, who is the whole-time director and CFO at Reflex Industries, joining us now. Now, remember, viewers, this stock on Friday saw a massive beating after there were reports that the income tax department has raided some of the offices. Today, Reflex has come out with a clarification saying that there has been no substantial outcome from that income tax raid, and on the back of that, the stock is doing very well. So let's interact with the management and try and get a better sense of what the whole situation was and how it panned out. Mr. Agarwal, thank you so much for your time today. The company clarified that there are no adverse findings from the income tax search operations. Can you help us understand what the search was broadly linked to and whether this was triggered by any specific activity?
This is not linked to anything or any activity. This is just a general search for the business as a business group completely. And there is no conclusion. As you ever, search is never a conclusion or it's not an indictment. It's just a general scrutiny process. And whatever it has come in the media is all fake. Income tax department has not given any official press release. This is the press, whatever it has come in the press is completely fake.
Okay. The stock has corrected around 20% odd, post the news flow. What steps are you taking to restore investor confidence? And, ideally investors, what should they expect in terms of regulatory overhang from this episode? At least until you hear back from authorities, what should the expectations be from an investor perspective?
Business is not affected at all. It is business as usual. Everybody, whatever the work is happening, it is completely, it is happening as per the normal course of business. And we are taking taking a lot of steps where for building the investor confidence, where whatever the regulatory steps we are taking it, we are sending in the notices to the media houses who has published this fake news. We are also sending the notices to the income tax department who has not denied the this fake publications. We are reaching out everywhere to counter this fake news.
Okay. And Mr. Agarwal, last quarter, you had guided to an order book of roughly 1,200 crore rupees. If you could break that down segment by segment for our viewers and highlight how much of this is executable over the next year.
Total order book as on date is 1,365 crore. After last call, there is a 3 order has been received. Complete 1,365 crore order is for the ass handling business and comprehensive ass handling business. In this financial year, majority of this will get executed. Part will get spilled over to the next financial year. Majority of 1,365 crore of order will get executed in this current financial year.
Also mentioned fundraising. Given current market conditions and recent events, are any funding routes being evaluated, and what timelines are you working with?
Company is well capitalized. Company is sitting with a good amount of cash. This year we expect very good profit. Company doesn't need any immediate fundraise, and there is no. We are not looking for any fundraise for near short term anything.
Okay, and at a consolidated level, Mr. Agarwala, what is your medium-term margin roadmap and which businesses are expected to drive incremental margin expansion for you and the business over the next 2 to 3 years?
Cash handling business is going to drive the complete business. It will be, currently we are doing an 8 to 12% of margin. And further, wind turbine manufacturing business will grow further. Current financial year will do anywhere to 400 to 450 crore turnover with a very minimal margin. And the next financial year will have a good turnover in the wind turbine business, and also will have a good margin there.
And you indicated an upcoming capex requirement, 30 to 50 crore odd. Could you specify where that capex will be deployed and the expected returns from the spend that you are looking to make?
It has not been deployed yet, and we are expecting the capex deployment in next 6 to 8 months. And company has sufficient cash from the internal accrual from the past fundraise to deploy that fund.
Okay, and lastly, Mr. Agarwal, if you could help us just gain a little bit more clarity on this. SEBI has imposed a penalty on Mr. Anil Jain, the chairman and MD, in connection with insider trading allegations, now, which is of course a very serious matter from a governance standpoint. Would you like to take this chance to clear the air on this specifically? Can you clarify the time period this action pertains to and the nature of the information involved?
This is related to last financial year, and we are confident that we are going rigorously against this on this appeal, and we are confident to win this case. There is no merit in this case. There is a gain of 12 lakhs to some individual SEC, and we are not part of this EPSC disclosure, and we'll be fighting this case in the appeal in the next level.
All right. Thank you so much, sir, for coming in and speaking with us. Of course, it's a tough time, but we appreciate you coming and talking straight to us with regard to this one. That's, of course, the management of Reflex Industry stock now perked up 17%. Sharp correction is what the stock price had seen, but we're seeing a recovery now, clearly and evidently at play. Mahesh, two stocks which have seen similar corrections, and I'll come to Ruchit just immediately after this. Mahesh, two stocks. One is a Keynes, one is an Interglobe. Any of these looking interesting?
No, so I think both wait and watch, Harsh, purely for the reason that there has been a lot of news flow surrounding both these stocks at the current juncture. What probably comes out in terms of regulatory actions, specifically in the case of Interglobe, I think is going to be extremely critical. Obviously, the management has put out a note that they have been asked to cut their schedule down by 5 to 10%, which means the remainder 2 quarters and FY26 will be revised downwards in terms of revenue projections. But what really comes out from from a regulatory action perspective is a large unknown for the markets. So I think a large part of the fall is now gestated, in my opinion, because again, new fleet additions that are probably expected to happen both from Airbus and Boeing, they're also probably stagnating for some reason or the other, both from a technical perspective as far as deliveries are concerned. And therefore, it's not like that competitors are going to have a solid say in terms of what deliveries happening their way and therefore dominating the kind of market share that one expects as far as the skies are concerned. And therefore, the worst in terms of price is over, but that overhang probably remains. Similarly for Keynes, I think what probably comes through in terms of reported numbers in Q3 are going to be extremely critical. Again, valuations are not cheap even at this juncture. So they will keep on growing, as I've always maintained, in terms of volumes, the client additions that they're probably doing. But for a business to probably report a better sense, I think, how is the operating leverage getting played out? Are margins expanding? Is there sufficient amount of evidence for bottom line growth, which probably we map through EPS ratings and markets with India? That remains unknown unless the ODM component starts coming higher for Keynes and even its peers. Therefore, wait and watch, and we'll probably wait out for both numbers as well as developments happening on all these counts in the next few weeks.
Okay. Ruchit, with regard to AB Capital in particular, it's a stock which is now at a 10-day low, and we've seen a bit of a correction in trade today. Opportunity to buy, you reckon this one has gone from 149, which is the 52-week low, to currently sitting at 350, and plenty of traders, investors looking at this one. So I'm trying to get a sense from you where you sit on this one.
So while the broader trend still remains positive, but we have already seen a good run up, as you said, over the last couple of months, and the momentum readings are a bit overbought. So there should be either some dip within the subtrend or a time-wise correction. So buy on dip should be the strategy if anyone wants to take any fresh new positions. And the major support for the stock is coming around 330, 335 range. So if we get any kind of dip towards that 330, 335 in the near future, then the risk-reward ratio could become favorable at those levels. So rather than buying at current levels, or wait for some declines towards that support to take fresh positions.
Okay, so that's on AB Capital. On the charts, the stock is low by about 3% as we speak. But let's shift focus to the primary market. A very good listing today for Corona Remedies, but on the flip side, it was a muted debut for mattress major Wakefit Innovations with a flat debut at issue price of 195 rupees. The management believes that there is huge opportunity in the Indian market for growth. My colleague Anurag Joshi caught up with the CEO and Chairman Ankit Garg. Let's go across and listen in.
See, I think we as a company have always looked at what can we bring more to our customers, what more value can be added, and hence over the last 5 years we evaluated more than 65 companies. We speak with them, we try to understand what they bring on the table, whether it's a good team that they have, whether it's a good proposition they have built, or they have large supply chain, including factories belong to them. See, I think if you look at Wakefit's journey, first 5 years we were profitable. We used to pay advance tax as the company was making money. Then we opened up a large manufacturing facility. It was a greenfield project. We invested a decent amount of money because we wanted to get into furniture. It took us a time to get to a decent utilization of the factory, and hence for the first those 2-3 years there was some turbulence in raw material prices because of COVID, and then obviously this greenfield project together happened, and hence company slipped into losses. But largely company has always, for the last 10 years, out of 10 years we were profit making for 7 years. This year also we are again profit making, and we continue to do so for the foreseeable future also.
Okay. Godavari Power is the other one which is doing fairly well for itself. There's also GPT Infra, order wins continuing to keep those in focus. ESAF, Small Finance Bank, up 3% as well. Some of the smaller names, which are doing decently well. And again, that's also on the back of news flow that has come through, which is spurring the stocks higher. So some of those names. But along with it, BSC, the likes of an HDFC, AMC are seeing a bit of a cool off. Motilal Oswal in that list. Kunal, a view with regard to AMC's good time to maybe nibble, given that there are dips now, and buy on dips. Is that the right approach for some of these names?
Yeah, for select few, yes. I think Nippon, for example, that's a name which has been doing very well for itself for the last many years. And interestingly, the stock in the recent past also has gone through like a 20% correction from 975, 980 to 800 levels. That makes the trade a little bit more attractive for Nippon Life. HDFC AMC, apparently the stock has gone through a correction which is a bit differentiated correction the stock has seen in the historical past. That probably indicates that we could now be looking at maybe a zone of consolidation over here. But Nippon NAM India on the NSE, that's something which looks attractive.
Okay, so that's the take on HDFC AMC and some of the other stocks that are in focus. But on the other side, Ruchit, let's talk about some of the building material themes, something that we haven't spoken about in quite some time. Cement is there. Today you have a note on Kajaria Ceramics, that stock is up 4%. Other than the real estate, from this real estate Anks group of stocks, anything looking attractive on the charts?
So I think selective cement stocks have a good risk reward ratio at current levels. Stocks such as Ultratech Cement and Dalmia Bharat, where on the weekly charts we have seen a trend reversal kind of pattern getting formed. Prices have already seen a correction over last couple of months. So they are trading around their mid to long term support. So the risk reward ratio is favorable in taking some contra longs over here. But very selective, not a sector as a whole, but stocks such as Ultratech or Dalmia Bharat within the cement space offers good risk reward ratio to go long at current levels.
Shifting focus to Amber, that's the other.
Of course, last week we've seen the entire debacle with Keynes. Any view that you hold on the overall space or any stock-specific views here?
No, so as a target market, I think the market is expected to grow twofold over the next 5 to 6 years. And therefore, I think there will be significant opportunities for all these players. There are no two ways about it. However, I think the point that I was maintaining in the case of Keynes continues for these players as well. I think how much of a margin expansion will come through, because that is when I think the clear operating leverage will play out on balance sheets. And how the margins will expand is through the ODM part, whereas the original design manufacturing part is going to take their margins significantly higher. The second element, if you probably break up the entire EMS value chain, whether it's Keynes, Amber, whether it's Sirmai, SGS, I think they're catering different industries as we speak. So Sirma does probably a lot of energy and aviation. Keynes probably does a lot of consumer durables as an example. So I think growth is going to come through all areas as we're going to speak in the next few years. But I think which company will give us that margin profile or the margin band which will expand? I think that company will prove to be an outlier. And even if valuations then remain a tad bit expensive compared to the rest of the space, I think those will be sustainable with the kind of business opportunities that come through.
Okay, so that's on the entire EMS space. Kunal, anything looking good to you? We've spoken about Keynes in depth last week, but what about something like a Sirma? How is that shaping up on the charts?
Well, I think Sirma is also going through a similar kind of a correction, maybe not similar as such, but then it looks like the stock has gone through a decent correction the last 1 month or so, from 900 levels to now 730, more or less, or a 20% correction for the stock in the recent past. But the fact is that the stock has not yet come back towards tapping a strong support territory. As I look at the charts, currently the near-term support for the stock is around the 650, 660 mark. Currently the stock is at 730 levels, which means potentially for the stock to complete a major retracement or a support retest, it could probably go into a 10% correction first before it goes into a major retest of the previous support. So that's something which I'll probably watch out for in terms of Sirma SGS.
Okay, interesting. A couple of other names which are doing well, and Aarti Industries. Ruchit, do you have a view on this one? 5.5% higher in trade today.
So recently, we have seen a significant price-wise correction. So the momentum readings are a bit oversold. So we could see some relative pullback move towards 400, 390 kind of range. And today's volumes are also quite better than the daily average what we've seen of past. So pullback towards 400 cannot be ruled out.
Naresh, anything new that you picked out over the last week or so? Something interesting in terms of a name, in terms of a stock that has interested you?
So we are looking out for APL Apollo tubes, Harsh, within the building material space. I think what is really of interest is that structural steel is going to make up in terms of volumes over the next few years. Whether you're talking about urban infrastructure, industrial growth, and that is where I think APL Apollo tube might have an edge. because they are dominating in terms of the manufacturing prowess that they probably have. In fact, they're adding capacities. They're at 4.8 million tons. That's expected to go up by the end of FY28 to almost 6.2 or 6.5 million tons. Again, if you probably look at how numbers are expected to shape up, EBITDA per ton, which was obviously under pressure over the last few quarters, has started improving. They reported an EBITDA of ton of almost 5,250 odd rupees, and for the first half, almost 5,000 odd rupees. Working capital days are zero, so I think they run a very, very lean working capital cycle, which reflects in better ROEs at 24%, ROCs at 32%, with cash on hand at 500 odd crores, and with expectations in terms of more product mix coming through in terms of value-added products with better margins. Our own sense is that this is one space that can really do well over the next few years, and APL Apollo being a leader in that space. If they keep on posting numbers and a revival in numbers, in my opinion, I think the balance sheet might actually hold up quite strongly over the next few years.
Okay, so that's the take on APL Apollo and the overall building material space, but only about a couple of minutes left. Ruchit, very quickly, your view on the market tomorrow. Where are we touted to open, given tomorrow is the weekly Nifty expiry? What kind of action can we expect?
We started the session on a negative note today. In the morning, Nifty was down by 130 points here, but we have managed to recover well from the lows. And there has been good improvement in the advanced decline ratio as well. So this clearly indicates some good buying interest, in the at least in the large cap space. So I think this should lead to a positive move tomorrow. And we expect, led by the certain large cap names, Nifty could head higher towards 26,070, 26,100 zone in next one or two trading sessions itself. So biasness would remain positive, and any intraday dips also, just like today, what we saw, if we get in tomorrow's trading session, that could be used as a buying opportunity in the index.
Okay, now last couple of minutes left in trade. Let's quickly start, in fact, wrapping up. Ruchit, thank you so much. Mayuresh will let you go as well. And, when we're looking at the Nifty, Kunal, continue to be with us. We need to have your take after close. A 0.1% lower, at least at the moment, on the Nifty 50 index, but we've had a very good recovery. So that's one of the big